Okay. Yogesh Mehta, good morning. Thank you for joining us. I want to start with a stock which, as a firm, Motilal Oswal Securities, they track with the magnifying glass, and that is RBL. Why has the stock plunged the way it has plunged suddenly? There is nothing wrong with RBL in terms of in business approach or a model. When they did the QIP, they got a massive response from investors, and everyone thought that RBL could be the next go-to stock after HDFC Bank. Suddenly, the tide has turned.
Good morning. On the RBL Bank front, if you see, then the whole market has corrected by 10 to 12, almost 8 to 10%. And on the NBFC front and the banking financial, all the stocks have gone down on a correction with the sentimental reasons. On fundamental front, post the QIP, nothing has got changed substantially that the valuation may get eroded. The only thing is the concern over investor could be that higher valuation and may get some better value, the better prices at the lower level. That has eroded the price of the share. But otherwise, there is no fundamental reason that RBL Bank can correct significantly due to any external reasons or due to some balance sheet reasons.
Okay, so are you a buyer in RBL? What else are you buying? Are you revisiting some of your old favorites, and are you telling your clients that they should put money to work?
Yes, definitely. Since the opportunity is there now again, the whole scenario has got upside down in last just one or more than 1 month, and we believe that the story is still intact. We have seen good numbers flowing in from the third quarterly numbers, and we are projecting that fourth quarter number will also be very good for a measure of the sector's performance on the company, and the FY19 can grow by at least average 18 to 20%, if not 22 to 24%. So on that basis, we believe that yes, there are companies which have given a significant correction, or all our opportunity to buy, like RBL Bank, even Larsen and Tobro, Britannia, which has not corrected, seems to be very strong with the volume growth of more than 10%. Infrastructure companies we like in the mid cap, like KNR and Sadbhav. So all these, of course, the auto companies are there. Need not to mention the names like Maruti, Bajaj Auto, Ashok Leyland. So all those companies we like very, very much, and even ICICI Bank. So there we are asking clients to put more money as far as investment is concerned. But let me put a disclaimer: it is not a trading ideas; these are investment ideas.
Yogesh, are you not worried about the exposure that some of these large corporate banks may have to not, the PNB Nirav Modi account, but many others which could actually come about later on? And given the way the yields have been hardening, there's bound to be impact on the earnings and profitability. And I'm not talking about ICICI Bank in particular, I'm just talking about banking as large. So why then some of these private banking names?
See, on the private banking names, yes, the hardening bond yield are gonna give some hit on the HTML portfolio. But the thing is, if you they are all scary with the PNB fraud post that, and now they are much more stringent on disbursing fresh loans. Rather, they are not aggressive. They are just putting more caution on disbursing new loans to the new borrower. So that way they are keeping all the checks and balances in place. What we believe is that if you want to have allocation, you cannot have all the allocation into consumer sector, all the allocation of the portfolio into this pharma sector or the IT sector, which are performing. But their private sector banks are the one which will get some kind of a wallet share will get increased from the PSU banks loan book. So that will drive some more profitability for them. And the proven track record is all there for all the private sector names. I'm talking about the top names like HDFC Bank or the IndusInd Bank of the world. So there, this gives a good opportunity, and that's why it all. That does not mean that this does not suffice that the price has not corrected. It has corrected, but now bounced back again. But then also with this kind of growth rate on the loan book, on the continuous previous history is also supportive, and the performance. And we believe that a strong valuation will drive further growth for these companies over next 1.5 year also, and it will be a decent opportunity to have private sector banks into the portfolio.